Good morning, everybody. This is now Monday, 2/24, and we are here for our weekly planning and scanning. I wanted to first show you a weekly chart at the very top. What you're looking at are weekly charts. This is my newsletter page off of my Genesis platform. Notice that right now, current price on the S&P is 1838.50. We're at 1165 on the Russell. We're at 16,115 on the Dow. The NASDAQ is at 3674. The NASDAQ generated 3 weeks ago a buy signal, a PPS. That's what this is versus looking at the Thinkorswim's platform or TradeStation platform. The weekly right now is telling us not that we are in a buy. What it's telling us that this is the threshold that a weekly buy signal at the end of this week, if the market is at this level or higher, if the market is at this level or higher, if the market is at this level or higher, we will generate weekly buy signals again in all. We will have now completed the trifecta. All three indices, the Russell, the Dow, the S&Ps will be in a buy. The NASDAQ has been in a buy. Interestingly enough, we look on a weekly basis, bonds have been in a buy mode. They've stalled over the last few days. Last week we identified we had a sell signal, but we really wanted to see the market trade lower on that daily sell signal and get below that last conditional change candle. In fact, that is such an important observation that even this week's planning and scanning, the first thing I wanted to go over is our daily positive thought. I started this concept at the beginning of the year because I think for traders we need to be in a positive mindset and know what we're here for. If you're only here for day trading, then it's going to be a difficult, I think, you're just not giving yourself the full-fledged market. And to be truthful, this is probably not your room if you're just interested in just day trading. I am a diversified trader. I think in the concept of day trading, you're going to find difficulties through time periods of the year. You'll end up forcing trades because you need to make a trade, because you think you need to make a trade. And there's times where we need to let our position trades. There's times where you should be in an option strategy. Diversification, as they say, is the key to success. And in trading, that's how I was taught. The most successful floor traders, that's right, floor traders in the old days, the most successful floor traders did not just day trade. They had positions and they traded around their position trade. They held a seasonal long trade or a short position in a seasonal move. So therefore, that's been my background and my schooling, and that's how I do it. There are times when scalping techniques will probably give you some added extra income. Scalping is something that's designed to be very short-term in nature. You generally use an increased lot size. I don't want to get a lesson in trading. I just want to give you what the design of the room is about. We're here to teach what we and follow through with our teachings from the Trading Triggers online module program to reinforce the techniques that we have shared in that trading course, Trading Triggers University. So with that said, I think it's very important to be focused what we're here for. And this year, when I started over taking control of the room, I said, you know what, we're going to start off with a daily positive thought. And I think today, just to give you a history lesson, the man who kind of started the whole concept of positive mental attitude, the man responsible for bringing that is Napoleon Hill. So therefore, I thought, you know what better way to give acknowledgement by starting with Napoleon Hill's famed concept saying, whatever the mind can conceive and believe, it can achieve. So if you believe and you can conceive that you are a successful trader and you follow a plan of successful trading techniques, and if you follow that plan, then you should become a successful trader. End of story. So I thought it would be important to start the week off with the daily positive thought from the man who started the whole concept, Napoleon Hill. And I know this line has been copied by many people without giving credit to that single name right there. Tony Robbins is one, and there's a host of others that failed to mention. They just reword it, but Napoleon Hill was the originator of the concept of positive mental attitude. And his book, I believe, was Think and Grow Rich. So in any event, what do we have going forward for this week and today, more importantly? This morning, we've already had the Fed Index, 8:30 a.m., PMI services at 8:58. This is all Eastern Standard Time, by the way. The Dallas Fed Manufacturing Services at 10:30 this morning, and Thomas Honig speaks towards the close. Earnings, these are the main earnings, the companies that come out. Some of them are listed before the market but did not have official times. Magnum Hunter is one. This is Caesars Palace, Caesars CZR Holding. They also own, I think, the Flamingo and a few others. After the market close, we have a few others that we're going to go over, especially VNO. Last week, and that's what WTD stands for, sector performance. The best performing sector last week, as far as stock indices is concerned, was the Russell. It came back to life, up 1.4%. The drug sector, as identified by the ETF DRG, that index up 1.26%. IXTC, Internet Interactive stock sector, up 1.23%. Healthcare, as measured by the XLV, up 1.03%, and retail up 1.31% as measured by the XRT. Your worst performers, with the Dow Jones Industrial Average, only it was down -0.3%. Financials down 0.7%. Financials, as measured, oops, looks like I duped and doubled that up. Sorry about that. Delete it. At least it's consistent, sharing you that the XLF is up, down, that's a -7.4%, and consumer staples down 0.5%. The regional banks was down 1.68%. KRE, just to let you know, was up 43% last year. On a year-over basis, the regional bank sector was up 43%. It has given up about 6% of that this year. We start to see a resurgence, and I want to make certain that everyone understands regional banks is entering a seasonal time frame for strength as we head into March. Next week, Saturday, I believe, or Thursday or Saturday, we're going to do a special month in review and beginning of the month seasonal tendencies for stocks, sectors, what to look for, and I think it's been fairly helpful for us to focus in on those names, and just wanted to give you that announcement. Weekly high close dojis. I'm going to go through these. GM, Ann Taylor, McDonald's, PDCO, weekly low close dojis. The banking conglomerates, Bank America, Citi, and Comcast, which has been on a tear this year and last year, generated a weekly low close doji. We want to talk about these weekly patterns, and we'll do that in just a moment. For the day, we had, here were some daily high close dojis and some daily low close doji. Again, Comcast showed up as a daily low close doji and a weekly low close doji. So not only was it a daily sell, but a weekly sell at the same time. Last week, we gave out some intermediate to swing trades. CLF was initiated. Green means it's in the green. Weyerhaeuser got, this was the suggested prices of entry, and this is the suggested stop level. One could trade this either way. The actual stock or trade options on this stock as it hits the suggested entry levels is what I gave for last week. So taking accountability, red means that it ended the week, it got filled, and it is down on the trade. We'll take a look at how much down on the trade in just a minute. Ross Stores also got picked off at 67.63. These are marginal losses. They're just pennies below their respective entry levels. Leggett & Platt is a home furnishing. It's in the consumer discretionary sector. It never did get initiated. That's why it's in black. It's not filled. So we'll take a look at that. I want everyone to pay attention and stay focused in the next coming week, week and a half, to the regional bank sector. Some of the big names you may be familiar with: Susquehanna, SUSQ, Regions Financial, RF, Huntington Bank Shares, HBAN, BB&T, and MTB. These names right there may be giving a setback amongst a longer-term recovery, and so even though the KRE, regional banks, these names are within that segment, maybe not necessarily the the KRE itself, but they are regional banks. And maybe want to focus in on regional banks, and two reasons. If the regional banks improve, it means the lower end of the economy, not the higher conglomerate banking stocks like your Bank Americas and your cities, are improving. And if that's the case, that means we are starting to see gradual improvement in the economy. As the weather starts to clear and et cetera, and consumers start to go out, you know, there's certain buying habits that happen. People are starting to get cabin fever, making vacation trips. We see Priceline outrageously through the top. And you know, the funny thing is, I've got Priceline down here in our alerts for this week. I still like LinkedIn and think there's a shot that maybe this week, next week, we could see 182, where I'd want to put on a credit put spread. I still see the opportunity for Tesla to hit 215 to 218, where I'm looking to put on a credit call spread. And thus, with Priceline, I did a little bit of more research and noticed that at 1337 we have quarterly resistance in Priceline, and that might be a good idea to be looking at Priceline on a credit call spread. As a chart review, we're going to change that during the week because if S&Ps break under 1814, it would trigger a reversal signal. It would trigger a last conditional change sell signal. Bonds, if they break underneath 132, it triggers a last conditional sell signal. And that's what I was pointing out to you, bonds. It's underneath this low based on the date of 213. So with that said, I think it's important that we follow up, not to ignore the research that we've already done. In addition, I did a little bit for those that do have the access to the Bottom Line newsletter, and I'll share that with you with the bonds. The bond market, actually, because we are in a, and I want to bring this up to focus, it's kind of forming that little wedge pattern formation. Technically speaking, if it breaks out of this area of consolidation, if it breaks out of the downtrend line, which I didn't draw exactly, but as you can see, if it breaks out above the high of these midpoint candles in here, if it breaks out above the high, there's no reason to, from a technical perspective, to see trend, then consolidation. And if it breaks out of this wedge formation, it generally will resume the trend. Wedge patterns, not to give you a life lesson on technical analysis, but there's two ways to do it. The distance from the base to the top, just like a flagpole measurement, to the low end of the near the apex of the wedge formation, and that distance measures your price objective to the upside, which in this case would be somewhere up at this level near 138. The next way of defining this is the distance between the opening of the wedge formation. So in this case, from 135 to 131, it's 4 handles. Add 4 handles to the breakout, which is 133.21, and that gets you down near 137.20 area, which is damn close to the 138. And the 138, just to remind you, is the monthly pivot targeted resistance for bonds. This is a daily chart. Now let's look at a weekly chart. Weekly formed a W bottom base pricing action. The trend to the upside was on significant volume. Whereas prices didn't take out the old high, the volume action actually did marginally. It's had a mild setback in the market in the bonds, and we've not seen a huge decline in price associated with a huge move in volume. So this is truly a pause, and I think that's why when you get a daily sell signal, it's not going anywhere. So truly, I'm not interested in getting short bonds unless we cross beneath this level, which is also below that last conditional change that we have on your screen. So if we need to look at a break under 132, even on a weekly chart, you'll notice that 132, a break underneath 132, was a last conditional change candle on a daily basis. It's also a weekly low. It's underneath the weekly moving averages, and it would be then beneath the monthly pivot, thus giving us a more confirmation that we're selling with weakness rather than picking a top in the market. So I wanted to go through some insight and in-depth analysis on bonds. Many more retail traders are trading bonds because of the increase in volatility that bonds had, because of the increase in promotion about trading the ETFs. One ETF is the TBT, which tracks yield, and the other is TLT, which tracks price. So they're both, one tracks yield, one tracks price, and more people are interested in trading that. It's optionable. So stock traders have been, migrating to trading bonds via these ETFs, and probably not having a lot of success because the people that promote them are looking at option matrix analysis, historic volatility, implied volatility, and they're not looking at more directional trade concepts. When bonds move, boy, they really move, and they can really destroy an iron condor strategy, to be truthful. So with that said, my concept has always been be directional, improve your technical analysis, and you'll find yourself doing less adjustments. If a trade doesn't make sense, stay out of the trade. Don't just put a trade on because you think it can't move or won't move. So I have many of those types of concepts, and one of which I'll talk about today is my nemesis for the last 2 weeks, which has been gold. I don't understand gold's rise, especially as it relates to where the dollar is. I don't understand gold's rise as it relates to the stock market, so therefore I've stayed out of the move in gold, and I'm just waiting for more clarity in that market segment. So just to let you know, for bonds, if we are, as you can see, now going into the threshold, we just started to see that move at 133.07. That pops us back into a daily buy signal. So I think it's imperative and informative to know that even though we get a daily sell signal, if you're in a consolidation range, you don't take daily sell signals in consolidations. The higher degree time frame, the weekly charts, they take precedence right now. So with that said, we also had an observation that, as you can see here in my chart notes for the week, the knob spread, we have this bonds, if they break around 134.12 to the upside, 138 is the potential, and we have a rising or an increase in the knob spread. This is the knob spread, the notes over bonds. You'll notice that the bond market was up marginally and the note market was up marginally. But notice that the rise in the price differential between the bonds and the notes is, it might be hard to pick that out, but truthfully, on a day-to-day basis, bonds outperformed the upside over notes. While both markets were up, bonds were up more than notes, and that's what this spread chart reveals. And so when we see a rise in the knob spread, when this spread widens, it shows us that bond prices are increasing over notes. Bonds increase when there's a weakness in securities, there's a weakness in equity markets, so to speak. So when people don't feel comfortable with the U.S. markets, when people have a doubt, they switch to buying bonds. They don't switch to bonds if they have a feeling that the stock market is going to break out and give more better returns. And yet here we are with the stock market pressing up and staying against this wall of resistance in the S&Ps near 1840. So I just have to say, there is, if anyone is out in the audience that has been confused and looking at the conflicting information, there is a lot of conflicting information within the markets itself. Intermarket relationships are not actually corresponding to the technicals and the correlations we normally see. With that said, our advanced decline analysis shares with us that it is a broad-based rally, but it's on light volume, as you can see in the Dow. The Dow has lingered close to its highs. The advanced decline has moved, but no volume. Looking at the NASDAQ, advanced decline has risen, meaning there's been not 1 or 2 or 10 names in the NASDAQ that have weighed on this index, making it appear stronger than it is. The majority of stocks within the NASDAQ have moved up in concert with the index price, and it's been on fairly benign volume. And the S&Ps, the same can be said. So there's the confliction right there. Bonds, they give us a daily sell, but then they don't go down. A market that gives you a sell signal that doesn't go down typically might go up until you know, unless it's in a range, which it is right now. So we want to wait for a range to be broken out on the bonds, and you want to buy a little higher, because if the market is still going to remain in a range, you know, you don't want to be anticipating a signal or a pattern that does not exist. So those are some of the areas that I wanted to kind of focus in on this week. Crude oil patterns look, as you can see, we hit almost right at the quarterly pivot support earlier in the mid-January timeframe. The volume has been rising, but lately, especially in the last week, we've noticed that the volume levels have tapered off a bit. So the market's kind of finding, as you can see, we're starting to find a little bit of a supply come into the market as we get up near 103.5. So for me, I don't know if it's capable, but that quarterly pivot resistance right there is very interesting price level. We've gone through all our, as I'm pairing up, we've gone through all our longer term pivot resistance targets, but we do have longer term stuff that suggests near the 105, closer to possibly just underneath that 105, which is our quarterly pivot resistance. And I think crude oil is going to find more supply. At least we're going to see if the market, as you can tell, every time it rallied, it broke, it broke, it broke, it broke, and it just continued to move lower. So there is a little bit of supply that may come onto the market. Distribution is what we call that. So in other words, that's what forms resistance. Price finds its equilibrium, it finds its sellers. So anywhere from 104.5 up to that 105.15, I want everyone to kind of be focused. Will it happen this week? I don't know. Anything can happen in a week. So with any tensions in the Middle East, any tensions anywhere, supply disruptions, increases in usage, refineries increasing and stepping up, buying reserves as they prepare for this summer driving season, you know, or spring break season. These are things that can cause the price to move higher in crude oil. So now let me go over to our scanning and planning page. And I want to give a complete picture for our what kind of sectors and trades. We'll go through stocks in just a moment, especially these high closed dojis and low closed dojis. But I want to complete our chart review and start off with the next chart on my list is bean oil. So here's bean oil prices. Notice that we did have a textbook weekly high closed doji. This was also near our quarterly support. We were trying, and we advised and suggested to be looking at long positions on a pullback, which never occurred. We've now had this market rip to the upside. At around the 140, I'm looking at resistance closer to the 143 handle, and I think that as you can see on a longer term basis, as you get near this area, 143, call it, start setting alerts at around 142.5 or so, 143, somewhere up in this zone up in here. On a weekly chart, it shows up not just with the pivots, it shows up on the prices. If you'll notice here, we had a wall of old highs met by that old low. So if you notice here, it kind of stalled the market for 1, 2, 3, 4, 5, 6, 7, 8 weeks, 2 months. The market had a hard time getting through 142, let's call it 80. So near the 143 is also, you know, as you can see, near these old-time support areas. Old-time support, once violated, turns into resistance on the first test. So if you're looking at a trade that might stall off of a major move, and let's face it, from 37 to 43 is a 6-handle move in bean oil. It's a pretty substantial move, especially as we start to taper off the seasonal trend. It is in a very strong move from a seasonal aspect from mid-January going into the end of February, and then through March it kind of tapers off. So any further gains here, it's going to start tapering off. One of the things about bean oil, it has a lot of competing products: canola oil, palm oil, coconut oil. There's a lot of other oils out there that we could see as competing to keep prices down. So therefore, strength in bean oil, I know it's a commodity that many of you may not be interested in, but these are some of the fundamentals that we see in the market mixing with our seasonal aspects that line up with our technical. So doing my due diligence, I thought we'd bring that to your attention for this week. Next, LC live cattle for commodity traders. Many of you may note that cattle prices have been strong. It might be finally in the news that there's cattle prices and beef prices are strong, but do pay heed to this little peak in price as we enter in on or about the first week of March. These long shadows in here, and I work with some guys in New Mexico who own a feedlot, and they've been using my pivot analysis and PPS indicators to help them with hedges. I'm not giving you inside information, but I am giving you information that says that guys are interested in hedging up here. And you know, these are not, these are guys that are in the cash market. Feeder cattle, and this is a live cattle market, and I understand there was a big storm back in October, November, increase in box beef demand, because at the end of the year, January, New Year's Eve, you generally go out to the restaurant, and restaurants don't, they either serve prime rib or they serve filet mignon, they serve products that are boxed. So as we get into there's less grilling outdoors, and I'm sure that if you're in Chicago at 1 degree outside, your grills are sitting there being unused. So the moral of the story, we also have this thing called Lent. There's a time frame of seasonal demand that shifts. You see a reduction in beef demand to a degree from the retail segment. And more importantly, here's the funny thing about live cattle. When we increased the population, ranchers took their small baby, let's call it baby cows, and put it into feedlots. And we see that by the increases in numbers by this report that comes out to everyone via the Cattle on Feed inventory report. There was more placements and less marketings. More placements, less marketings. Placements means there's more cattle going into feedlots. Less marketings means less sold. So a cow that gets placed in a feedlot, it takes 90 days about for that cow to get fattened. That means that baby cow becomes prime rib in about 90 days to 100 days or so. So if you think about, add 90 days to November, add 90 days to December, and what do you come up with? February, March, as we head into April. So you're seeing a lot of those fattened cattle coming into the market ready to be slaughtered. So there's going to be an increase in live cattle. Long shadows, when the market rallies and comes off those long shadows, I don't care what you say, that shows that there is supply. People are interested in selling as the market gets up there. So that's what the weekly charts are sharing with us. Now, there's two ways. We had a daily low close doji, a small this range wasn't your typical doji, which I would like to say, because the market was about 15 cents or so from the open-close relationship on a daily chart. But we did generate a PPS, sell signal. There's the opening bell. I wanted to go through this a little faster. On their sheets, we have a low close, a last conditional change, which is this tall green candle, breaks underneath that level. And that's why I have last conditional change. That breaks under 148 here. It will trigger a last conditional change sell-off. I'm thinking April cattle by April, and you may have to roll out of April. We could see the market get close to 135, maybe 136, and that's a heck of a trade there. So in any event, crude oil, I've already posted about the crude oil. I did it out of order. 105.15, quarterly resistance. Watch that for crude oil prices. All right, so for our planning and scanning, let me CMCSA, Comcast. Comcast generated a daily low close doji. It generated a weekly low close doji. From a seasonal aspect, it has a hard time seeing rallies this time of year. All right, So if you notice, from on or about the end of February, that stock, it peaks out actually in mid-January. It goes down, it has a little rally, and then it peaks out from a seasonal perspective that, as you can see, goes into April. Then it has another surge up in May, and then it has another downside action. So I would be looking at Comcast on any strength or rally back up to the midpoint, 52, 53 area. You may want to look for, if the market does rally, a bearish strategy that lasts for the next 30 days, and that would be the timing element on Comcast. Long trend consolidation, any type of strength early in the week, if you get it, Tuesday, Wednesday. Also note that I said 53, which is a weekly moving average up here. But if you notice that this trend line, this ascending trend line off these lows, it broke it. Typically, markets like to test the point of breakdown of trends. And if it does, it's around 52.80 to 53 even. So there, from a trend line perspective, a weekly perspective, I wouldn't just get short this market. I'd look for a snapback near that moving average and then put on a bearish bet. There's a huge gap in the market, and some people may consider that a small abandoned baby, but it's not a true abandoned baby because the market did not make a gap between the high, which was made on a daily doji, and the subsequent gap lower. But in any event, I think it's important to look at Comcast. Might be on the news sometime in the next day or two. So watch for rallies in Comcast. Don't get duped into buying this stock, at least on this pullback right now. The next I wanted to make mention is let's take a look at some of these banking stocks like Bank America, because if mortgages and the home sector improves, you know, using a weekly low close doji, it too should see a snapback. You know, typically you sell on the close or on the next session's open. And in this case, looking at the market from this strong trend, it's in a seasonally strong period of time. So for a stock in a low close doji, you know, I'm a little skeptical of this one unless it starts breaking down a little stronger against this old high, which is 1591. It's going to actually need to break not only that high, but note this last conditional change candle, which is the week of January 3rd. January 3rd, that area there, and that's where your line in the sand really comes in. And that level, you need to see a trade or a close underneath 16.5. It breaks underneath that, excuse me, the low on this move was 15.5. I'm sorry, 15.5. Repeat, 15.5. So if you get a close or trade underneath that last conditional change candle, that's the area that this market will also, kind of a nice little form of analysis, it'll also be breaking more of a longer term uptrend. So with Bank America and Citi, because they are in such a seasonally strong period of time right now, I would negate that trade setup. Next, McDonald's, they sell burgers. Burger prices, if they go down, McDonald's stands to make out. Seasonal trend for cattle to go down, it is the opposite for McDonald's. McDonald's seasonal trend is to go up. So maybe people drive, they're not snowbound, and maybe they go and head out to McDonald's in Europe. The joke is they're the cleanest restaurants in all of Europe, the restrooms in all of Europe. So McDonald's, as you can see, we did form a high close doji. McDonald's might be a longer term trade. We don't have any volume on a weekly perspective attracting into this market, but the daily volume sure did break out, folks. So pullbacks in McDonald's might be worthy of another bullish longer term strategy, looking for prices to stabilize, maybe not be aggressively higher, and the best strategy there on a pullback would be a credit put spread. So I just wanted to go over a couple of those trades, some ideas for you guys for this week. And through the week, our members will enjoy some more of our stock picking and looking at some of the trades that we had pointed out to you that I think are still worthy, that are in seasonally strong period of time. So, for example, we look at Weyerhaeuser, which, as you can see, Weyerhaeuser at 30.24, we're at 30.23. We try to take CLF, Cliffs Natural Resource, the market's now giving us a little bit of a headache. We're at 21.45. Last week's suggestion was 21.73. And then finally, we want to look at the current one at Ross Stores. Ross Stores at 67.76, and this is the time frame. As you can see, strong seasonal tendency for Ross Stores. So the market is Ross is now, we got to change the coloring. Ross Store now positive from the entry. All are about right at the level that we got in, so I probably should just not even touch that. So there's a quick review of what we've done, at least taking into account from last week to this week, and then we'll be looking for day trade setups as the week progresses. So there's our chart review this week, Thursday. Keep in mind we have we're going to go through a webcast, I believe, on Thursday, if I'm not mistaken, and then possibly Saturday morning is my intention. So look for the emails as we put together what I think is going to be a very needed end of month, end of the first 2 months of the year look-see into the last month of the first quarter, which is March. So we'll do a seasonal look at the different segments of the commodities, stocks, futures, and we'll look to see if we can put out any option strategies for that time period as well. So with that said, I want to say thank you all, and I hope this information serves you well for this trading week.